Hard Talk. Watch on BBC iPlayer.
The head of Microsoft heads to a US court in an antitrust trial challenging the dominance of the world's most popular search engine. Indonesia's first bullet train takes off from Jakarta, fueled by Chinese funding under its Belt and Road Initiative. Hello and welcome to Asia Business Report with me, Arunodaya Mukherjee. Let's start the program in Washington, D.C., where Microsoft's chief executive Satya Nadella has testified in court. He is the government's highest profile witness in its landmark monopoly case against Google. The BBC's North America business correspondent Michelle Fleury reports from New York.
Go on Apple's Safari web browser and you will find that Google's search engine automatically pops up. That's no accident. It's the result of an expensive contract between Google and Apple. Microsoft chief executive Satya Nadella blamed these sorts of deals for making Google so dominant. Appearing in person, he told a packed DC court that because of these default agreements, you get up in the morning and you brush your teeth and you search on Google, he said. Now, the Justice Department's case revolves around these deals, which ensure that pretty much every smartphone sold in America comes out of the box with Google Search pre-installed. The Microsoft boss said his company has invested more than $100 billion into the development of its own search engine, Bing. It's also invested heavily in artificial intelligence and is considered a front runner. But Mr. Nadella warned that there were limits to how far AI could reshape the market. Now, his appearance comes many years after the tech giant faced its own monopoly case, which was settled back in 2001 and which paved the way for competitors like Google.
In more news, we're now into October, in the final quarter of 2023, and this morning we're going to take stock of the year and see how the rest of it will likely pan out in the financial markets. Our next guest believes investors have grown more optimistic about the global economy and its largest markets. While the US has seen a better than expected recovery, the picture, though, somewhat shakier in China. Well, that's according to Simon Baptist, chief economist at the Economist Intelligence Unit, which provides business intelligence as well as market insights. Simon, good to have you on the program and thanks for coming up for us. We are into the last quarter of the year, as we said. What is your assessment so far and what are your predictions as we look to round off the year?
I think the big summary for the global economy right now is solid but unspectacular growth. We actually think at the EIU growth in 2024 will be 2.3%. That's exactly the same as this year. So the way this year feels, I think, is how we can expect next year to feel. Now, the composition will differ a little bit. The US economy has surprised on the upside this year. Everybody has, including us, has been upgrading their US forecasts, and we're now looking at growth at close to 2%, as opposed to the more sort of 0.3% that was expected 6 months ago. So that's a big positive change for the global economy. And Japan has also had a very strong growth year, with growth doubling from last year 1% to this year 2%. So there's some of the bright spots. On the other hand, China's rebound has disappointed severely. China's growth is going to continue to slow, although I think that the expectations have now adapted to where China is sitting. So while the growth won't accelerate, it might feel a bit better because it's now set against lower expectations. And probably the Chinese government is going to continue small amounts of stimulus, not big bazookas, but small and moderate measures to stop the economy from going down any further.
Simon, you know, some analysts have been of the opinion that inflation around the world has been fairly stubborn, which has also, of course, shaped monetary policy across various central banks. Do you feel that the central banks have done enough to tackle it, or what more can really be done in the circumstances?
Yeah, I think the central banks had a bit of an unfortunate turn of events. Without the invasion of Ukraine, I don't think we'd be facing such a large and persistent inflationary episode. It was just the coincidence of the supply chain snarls from the end as COVID was kind of ending, and then working through that, then there's the commodity price increases from the war in Ukraine kind of came along. So I think without that, central banks would not have had such a tough time. And they have risen rates pretty fast. We can argue maybe they should have down a quarter point a couple of meetings earlier. But I don't think that would have fundamentally changed the situation. A deeper issue is that the inflation we have now is not really in central banks' remits. There's the supply chain snarls, there's the war in Ukraine, and then there's a bit of kind of pent-up demand from the COVID stimulus checks and the fiscal boost that governments had done. So things that are more supply side issues rather than things central banks could fix. Rates have gone up a lot, and I think that's going to be something that will cause growth in the US to taper off a little bit over the year ahead, and do expect the US to decelerate while Europe will accelerate because of those interest rate hikes. And that is a key source of financial risk as well, particularly in US bond and equity markets.
All right, Simon, we'll have to leave it there, but thank you very much for your take. Now, speaking of central banks, in a few hours, the Reserve Bank of Australia will be delivering its latest decision on the cost of borrowing, and this comes ahead of other central bank meetings this week in New Zealand as well as in India. Policymakers in Australia have raised interest rates 12 times since last May, pushing the cost of borrowing to an 11-year high. For clues on where the RBA is headed and how that will impact the Australian economy, let's now speak to Katrina L, senior economist at financial intelligence firm Moody's Analytics. Thanks very much, Katrina. Good to have you on the program. So what are your expectations?
So our expectation is that the Reserve Bank of Australia will stay on the sidelines today and keep the cash rate at 4.1%. I think, as you've mentioned, the central bank has already done a lot of hiking. We've seen 400 basis points worth of rate hikes in a very short period of time. So I think now what we're expecting is that the central bank is going to sit on the sidelines and wait for the impact of that significant amount of monetary tightening to really filter through the economy, because it does take time. Our expectation is that it does take about 6 to even 9 months for the full impact of 125 basis point hike to materialize via slower domestic demand. So we're still in that waiting game, waiting for inflation to materially cool with the existing hiking that we've already had.
And Katrina, we're also looking at a new RBA governor holding her first meeting. Do you think that's going to influence different priorities? How do you see that?
Yeah, so it's a very exciting day. It's Michelle Bullock's first, central bank meeting as governor. But I don't think it, changes the monetary policy outlook or monetary policy stance from the Reserve Bank of Australia. It is, very much steady as she goes. In terms of policy making, I don't think we'll see, much of a change of stance. The priority really remains on, making sure that inflation materially and persistently does, return back to the central bank target. And we still do have a while to go. Our expectation is that we won't actually see inflation return to that 2 to 3% target band until mid to late next year. So I think that's really going to continue to remain a policy priority, dependent or irrespective of who's the governor.
All right, Katrina, we'll leave it there. Thank you very much for your perspective. Indonesia has launched Southeast Asia's first high-speed railway called Whoosh. The service connects the capital of Jakarta to Bandung, an economic hub, reducing traveling time from 3 hours to under an hour. Now, the multi-billion-dollar project is partly funded by China as part of its Belt and Road initiative. My colleague Lisa Tambunan sent this report from the launch.
This is Southeast Asia's first high-speed rail, and it connects Indonesia's capital of Jakarta to Bandung, the country's fourth most populous city. The China-funded railway project began construction in 2016, and it forms part of China's Belt and Road initiative. After 7 years, it finally begins commercial operation this month, launched by Indonesian President Joko Widodo. With a top speed of approximately 350 kilometers per hour, the service cuts down commute time between the two big cities to approximately half an hour. This is just a fraction in comparison to existing train service with a duration of 3 hours. Cutting down time, however, has not come cheap. The total projected cost of the railway service was initially estimated at $5.5 billion, with 3/4 of that money coming from China Development Bank and the remaining from China Railway and Indonesian state-owned companies. But last year, the Indonesian government said it needed an additional $1.2 billion in order to meet deadline of a commercial launch in 2023. Additionally, The service was originally slated to begin operation in 2019. The project, however, faced problems, including difficulties in land acquisition, uncertainties regarding its economic impact, as well as construction delays due to the pandemic. As the railway service begins operation, there are now talks of extending the railway to Surabaya, the second largest city in Indonesia. Lisa Tambunan, BBC News, Jakarta.
Okay, let's get you some other news making headlines now, and talking about Evergrande, the heavily indebted Chinese property giant, which has now said that it will be resuming trading in shares in the Hong Kong Stock Exchange this morning. Now, it announced last Thursday that its chief was suspected of crimes following the suspension of its shares from trading that day. Evergrande has become a symbol of China's ballooning property sector crisis that has seen several high-profile firms saddled in debt. That's all we have for you on Asia Business Report. Do stay on with BBC News, and thanks very much for watching.
BBC News, bringing you different stories from across the UK.
Doug has cystic